Hello, this is Steve Malone with Forex. Hope you're doing well today and you getting some good trades. There's this old adage that says to kill two birds with one stone, meaning the ability to accomplish two tasks with one action or one unit of effort. And you're able to do that in the Forex market. And so today I want to talk about parallel relationships and inverse relationships. Recently had one of our clients write us and say, Dean, would you do us a favor and do a video reviewing the parallel relationships and inverse relationships in the marketplace? And the whole idea behind this is that you're able to trade two different currency pairs at the same time because they're either moving in the same direction or they're moving opposite of one another. And sometimes I have to remind myself when I trade that I'm missing out on another opportunity because one of the currency pairs is making a strong move and I'm not checking other currency pairs that would have a parallel or inverse relationship. I could be trading two based upon the strong movement of one. So let's go over what we mean by parallel relationship, and then we'll talk about the inverse relationship. Parallel relationship, as it implies, parallel means they're moving in the same direction. And a good example of that is to take a look at the euro dollar and the pound dollar. We can see in general they have a tendency to move in similar direction. Now there are going to be times where there may be some economic event in the marketplace and we'll get a strong move in one over the other. For instance, in this case, this goes back a while back when there wasn't any easing out of the Eurozone expected by the ECB, and we get a strong push up in the euro and then it fades back down. At the same time, looking down below here, the pound didn't make as much a strong move. It did go up and then fade back down. But overall, you can see the general movement of both the euro dollar and the pound dollar. Now just make note. At the end of every month, there's what's known as the month-end fix. This is a unique situation between the European Central Bank and the Bank of England. And there's a swap between the banks. And due to that swap, there's oftentimes a disconnect, meaning that one's making a move in one direction, like the euro dollar coming down right here, while the pound is making a move in the opposite direction. In this instance, consider looking at the euro pound, because the euro pound is going to have movement one way or the other depending upon which one of these is stronger or weaker than the other one. But overall, a very good parallel relationship is the euro dollar and the pound dollar. Look for them to move in the similar direction. Now there's other pairs like this, like for instance the Aussie dollar and the New Zealand dollar. They have a tendency to move in similar direction. Now one of the most unique parallel relationships we've had as of late is due to the US dollar's decreasing interest rate. Now that our overnight cash rate is down at 0.25 and getting pretty close down there nearly to where the Japanese yen is at 0.1, both the US dollar and the Japanese yen are being used for carry trades. This is where you sell the dollar and go out and buy a higher interest bearing currency, or you sell the yen and go out and buy a higher interest currency. And we're seeing this relationship. Here's an example. You can see here's the euro dollar above and the euro yen below. Look at the similarity here. Look at how they're both moving down, then they both move flat, down again, and then flat again. Why? It's the carry trade that's going on in the marketplace. And you can see it again over here. Look at the pound dollar above and the pound yen below. Very similar situation. Now this may not continue, as eventually the US dollar interest rate will start climbing and this relationship will no longer exist like it exists now. But just make note, when the market is looking to do reflationary trading or the carry trade, look for the opportunity to trade the major currency versus the dollar in the same direction as the major currency versus the yen. You have the opportunity of placing two trades based upon the strong movement of that major currency against the dollar and against the yen. Now, besides the parallel relationship, we also have what's known as the inverse relationship. This is where the two currencies are moving away